All right, buddy. Looking good.
Welcome to Momentum Monday. Today is Sunday, October 6th, and Howard is somewhere in Italy on a milking cows retreat, right?
I was milking sheep for mozzarella earlier. Now I'm drinking a little cab. No, I don't know what I'm drinking. Chianti. I'm in the Chianti region.
Good. How much pizza have you had for the past week?
I had a lot of carbs, but I've also been riding. It's been fantastic. We had a retreat here for a few founders and for social leverage. So, but the show must go on, Ivan. It's 10:30 here in Tuscany, just outside of Florence, and I'm dialing in via Zoom. The internet is amazing. So let's get to it. Walk us through the markets. Crazy week.
Yes, let me share my screen. All right, this is a chart of the S&P 500. Last week we saw a test of the 200-day moving average, which also kind of coincided with the lows from August. We saw a big bounce, and now the indices are back near their 50-day. So I don't think we're out of the woods yet. Probably we'll see more of the same, like more range-bound action in the next.
Yeah, I mean, sideways would be the most painful, right? It's been a really difficult market for guys like me, trend followers. I don't know. You've kind of switched to the short side a little bit and had, have had some success.
Yes, and last week we switched on the long side. If you've been following
I can't keep up with you, Ivan. You're switching all the time.
Well,
I am just, it's difficult for me. I mean, obviously this is why, I like talking to you. You have a different kind of attitude about this.
On Thursday, I mean, first of all, on Wednesday, when I sent a note to our subscribers, I had a question on it. What would be some of the characteristics, some of the signs that an impending bottom, short-term bottom is in place? And I said that we need to see a lot of buying near previous major technical levels. And
we saw it Friday, right?
Exactly what we saw on Thursday, actually.
Thursday.
When the market just was weak for the first half an hour, and after that it reversed higher. That's why on stock tweets I tweeted early in the morning, we are seeing some of the signs of for a tradable, short-term tradable bottom.
Yeah.
So if you're a swing trader, it's a good idea to get some long exposure. But if you're a position trader or a long-term trend follower, it's still too early. I mean, if you take a quick look at the 52-week high list, there's nothing
It was
exciting.
zero. I think Wednesday there were no 52. It was crazy.
Yeah, and on Thursday when we saw that bounce, it was mostly REITs, Pepsi, some staples. There was nothing exciting. The list is still very thin. So I think this is how you recognize between, is this like a rally that has further legs and is more sustainable, or is this just a short-term bounce? Is by looking at the 52-week high list. Like, do you see it expanding and more high growth stocks participating, or do you see mostly defensive names like REITs and utilities? And as of right now, we're not really seeing anything exciting on the 52-week high list. That's why I still think that best case scenario for the longs, which are most people, is kind of range bound price action. So
yeah, I think sideways will frustrate people the most. I think third year, I saw Ryan Dietrich post some third year of an election cycle. Markets tend to bottom around Thanksgiving.
Yeah, the small caps tested that 145 level, which has been important for the past more than a year. I mean, they're still below their 200-day, so there's nothing really to get excited about on the short side, unless you're really nimble trader who can be in and out in a matter of hours or days. This is not a market for long-term trend followers or position traders.
Okay, so let's go through some things that I'll let you go through some fresh ideas. Let's first look at the broker. This was a big week for me. I've been responding to emails for the last 3-4 days. So let's take a look at Schwab to start. Let's talk about some arguments on the web, because this is where it's very interesting, Ivan, what's going on because I live in these two worlds of private markets and public markets, and not real. I definitely have no expertise in real estate, but if we look at Schwab, the market has been telegraphing the need, has been telling these brokers to stop focusing on commission since Robinhood kind of started really raising money the last 2-3 years, right? If markets are not stupid. Now, we also have low interest rates, which have not been good for brokers. And we also realize this last mile of commissions has been a joke. The brokers are kind of they've agreed. If you call them, it's kind of like the old days of AT&T. If you call them, you can get free trades, right? If you threaten to move, I don't know where you're at Interactive, but if you're at Schwab like I was, if you just threaten to leave over the years, they'd give you 100 free trades or whatever, which is more than enough for any normal human being. So trading has been basically free. You had to be like a complete putz to be paying commissions if you were at a discount brokerage the last 4 or 5 years. But the brokers had gotten used to it, right? They keep their fat marketing departments. They like the $4 for that $80 to $100 million a year. It subsidizes their marketing. Now they've finally taken that last clip out, and combined with low interest rates and the fact that they can't make as much money off on the margin there, you can see what happened to the stocks right on the news. Now, the question is, is this the beginning of a secular thing? I think it's more kind of interest rate driven, these stocks, than commission driven. Now, I think with E-Trade, Ivan, I think they're basically cooked. The market's saying with a relative strength of 14 and the fact that it's back to 2016 prices, they're not a bank. They haven't been innovative. They're the ones that are going to be hurt the most. And I think you could see the panic kind of realization set in.
Yeah, volume. Look at that volume. It's just insane here.
Yeah, and if rates stay low for the next in the teens. With Schwab, I think they were smart as usual. Oh, my internet is a little unstable. Can you hear me?
Yeah, I can hear you, but it's a little spotty.
With Schwab, you can see little bit different because they have a little more revenue differentiator as a bank, but still, pretty much, back to 2016 levels. And it's not going to be an easy, environment for them in this interest rate environment. And I've been saying this for a while. I don't think assets under management mean what they used to mean. So in switching to the private world here quickly, Ivan, I'll let you tour the market. I think we saw a crash, right? Like I think when you have companies like Uber, overvalue or undervalue, lose 30%, 35% of their value in the public markets. The public doesn't want anything to do with these companies. There is a crash going on. Lyft down how much? I mean, these are companies that are almost like utilities at this point. That lose money. There's utility to the consumer, but there's not like a utility, meaning like an actual utility that does electricity. These are like poison in the public market, right? The public is a much different place to run a company. You have to, over time, make money. So I think there's been a crash going on. And I think we've got a crescendo in negativity. I wrote this piece in response to Scott Galloway this week, who was saying that Robinhood would drop 80%. There'll still be another 80% drop in a lot of these unicorns. These are giant sweeping statements that you don't get at tops, right? You kind of get them near bottoms. And you can see the IPO market finally kind of catch a bit here. I don't know. It could be the beginning of a long downtrend, but when professors start screaming, the world is coming to an end, smart as they can be, who don't trade those are good conditions for some kind of sustainable rally. I still think seasonally, Ivan, just I'm not interested. And from a trend perspective, I don't see much I like. But it made sense to me that the market could bounce for a week or two here. You know, the market should be doing a lot worse considering what's going on in the White House and the press and the headlines. I'm fascinated by like the fact that we're like in impeachment, like it's happening. I mean, whether he wins it or not, I'm fascinated the market's just this strong still. So under that note, with private markets kind of already crashing, and private markets set themselves a lot different than public markets. Like we were going from 50 billion to 10 billion is a crash, right? It happened over a week or 2 weeks. These prices get reset. You know, when founders start calling VCs over the next 2 weeks, prices are reset. You know, they can be 20, 30%, 40% difference in valuations. It doesn't take very much to reset prices. And the stock market moves little bit different pace, but we've seen with Uber and Lyft and Slack and some of these IPOs that for the last 6-7 months, it's just been brutal and relentless selling. I'm not saying these IPOs, because they're not making money, are going to bounce themselves, but the sentiment is in place for a sustainable rally in some great companies. You got to be careful what you pick, and this is why I'm not good enough and spend enough time to do this. But that's why we do this. So doing that, Ivan, let's do a tour of the Nasdaq, maybe, and some of the stocks that you're looking at.
Yeah, Nasdaq also bounced near its 200-day, and now it's near its declining 50-day. It basically looks the same as the S&P 500, which is normal to see. Correlations typically arise during market corrections. So this is exactly what we're seeing right now. I think Google and Apple are the stronger looking ones. Google is in the range.
Apple, Nike, Lulu, Fashology, but Google, not strong, but like hanging in there.
Yeah, Apple definitely is.
I mean, Apple's basically at all-time highs, Ivan.
Yes. Well, all those lines for new watches and new 13.
It's hard for me to see a bear market with what you've thrown at Apple. I mean, I guess sort of like, this is really incredible. I mean, I think the company's executing. If we look back to last December when I was like the Apple fund, this new watch, like the rave reviews, between the watch, the AirPods, and the camera on the iPhone 11, which I've become like all of a sudden like a camera. I love using the camera, just the quality. Super, super, super bullish. And have you noticed the lines at the stores, Ivan?
Yeah, I told you last week. I had something to do with Fashion Valley, and I saw a huge, huge line outside of the Apple stores, and also in Lululemon. Everywhere else was kind of empty. But those two are definitely, in terms of retail, they're the leaders.
Yeah, they've made the transition. This is what people don't understand. The fear of the switching of the iPhone, like everybody's already priced in the iPhone being dead, and they're never going to have another iPhone. That was a December of last year's story. Throw in China, throw in. They've just been masterful at their size. Look at Amazon. I mean, Amazon's down 20% off its all-time highs?
Yeah, Amazon is kind of struggling below its 200 days, so it's along with Facebook is definitely weaker than the rest.
Yeah, they got a little jig finally. And I'll tell you what, Facebook does not look weak. I gave up on Facebook. I kind of have given up on the stock. Just tired of like the nonsense that comes from that company and the ads. Instagram, they're probably going to print money for the next year, but I think that's also priced in.
Yeah, I'm starting to read some reports that the engagement on Instagram is starting to drop substantially.
I can't open it without seeing ads of stuff that I don't want to see, of clothes for millennials that, maybe I will buy this stuff one day, but it's not as enjoyable as it once was. I'm using smaller groups. So, yeah, and PayPal pulled out of Libra. There's there's PayPal, but it also looks weak. So what looks good? Ivan?
Well, as we already mentioned, Apple, I think Lululemon is looking also decent, is holding
Right.
its 50-day, and
Nike.
Nike, absolutely. They had a huge, not huge, but decent breakout on New all-time highs, and they're holding above that earnings breakout above 90. So that's
Incredible breakout. If I was in a bet, I mean, I'm already, that's those three stocks are my biggest positions just because the way the market's worked over the last year and a half, astrology, and I'm not comfortable adding more. But if I wasn't full position in these, I'd be adding to those three stocks. I mean, in this type of environment, they have great margins. They're not software margins, but the three brands seem just unbeatable right now in terms of their execution at the malls, direct to consumer,
yeah.
product love.
Yeah, here's another one that is executing amazing.
Yeah. But
Costco.
it's a subscription company, right? Like the geniuses of Costco, they figured out retail is just like hardcore retail is a subscription service, and America loves it. They get their they get their subscription, and they sell everything at pretty much at cost. And Costco's figured it out, and but Walmart's looking good too. A lot of these big retailers look good, and the dollars look good. Walmart's
Oh yeah,
basically
definitely. The discount retailers are near 52-week highs, as you can see.
Dollar General, places that I just don't. So the economy's working. Dollar Tree, wow. So again, like these don't excite me. These companies. I mean, Costco, obviously, I just as a non-retail shopper, I missed it. Stupid me. But Dollar. I mean, I just don't understand how to play these stories. But if you're looking for strength, that's where the strength is in these. And I guess Lulu and Nike are just high-end versions of that. Is there any other sectors, Ivan, for growth that look good?
For growth, not really. I mean, we're seeing semiconductors bouncing back, so there's some interesting setup in the sector.
Yeah, someone pointed out Marvell, MRVL, on StockTwits. It's not sideways. What's the monthly? What's the weekly look like?
Okay, let me go back. I will not.
5G play. So I haven't done enough work because of semiconductor, but that looks pretty good, Ivan. So some of these semis look great. So Texas Instrument all-time highs, Ivan.
5G play. What was the other one? So
Texas Instrument, Taiwan Semiconductor.
And definitely looking constructively near its.
Oh my goodness! All-time highs. Texas Instruments. Wow. Taiwan Semiconductor, which is one of the biggest semiconductor companies in the world, if not the biggest.
Yeah. So semiconductor as a sector definitely is standing out along with.
Let's say if you look at Apple's basically a semiconductor company too at some point. So basically, all this talk about recession is a bit of a bug. The American semiconductor companies very interesting. You don't see this in bear markets.
Yeah, that's why I'm saying that range bound is the most likely scenario right now.
What about on the SL50? What about Momentum 50 list? Anything stand out?
Let's see.
So you've got all your shorts are off, right? At this point, you're not.
Oh, yeah. On Thursday, I switched long.
Okay, Google, Nike, Lulu, Apple. Okay, so Restoration Hardware, damn me on that one. That's a great company. Teradyne, which I'm long. Okay.
It's had a big breakout last week. It's a biotech breakout on the all-time highs. Now it's kind of flagging. So let's see if it holds and sets again. The other one, CDW, also setting up near all-time highs. Technology hardware. So it'll be really interesting to see if the enterprise software stocks and momentum stocks in general that got hit hard in the past month will be able to sustain their bounce, or they're cooked, or they
could be like a small bear market headed their way. Like with Walmart, some of these bigger cap names where you can hide out for the next few months, because money's not coming out of the market, it's just rotating. So I think you can continue to get a bounce, but I think that, if these other cap names like Apple and Texas Instrument and Walmart, and Costco are doing well, you
I don't
won't.
know, but they're not really moving much. I mean, they're not, at least
No,
they're
but
not
money's
declining.
coming out there. And if the market gets strong, Apple's going to hit 250, 260. It's a big move in a big, a
Yeah,
40.
10%. Mhm.
Yeah, I mean, it's if we look at a weekly in Apple, I mean, it's been basing between 140 and 240, 230
Yeah, it's a big
for a couple years.
open candle here, definitely.
That could go. And it's not the catalyst for Apple is, market share in India. Catalysts are service-based business, a higher multiple business because of service. I mean, the stock could go and great margin. So you could catch people a little bearish is all I'm saying. And that's all the market needs to rally 5-10%, and Apple could rally 10-15% in a move like that.
Yeah, one of the interesting things I noticed about the rally on Thursday and Friday is that as stocks lifted as an asset class, we also saw strength in treasuries and in gold, which is kind of unusual. They kind of usually move in the opposite directions, but
what do you mean by that?
I mean, that's a defensive move for me. That bounce is just a bounce either in a range bout or an overall downtrend. So I don't think it's a good market for intraday traders, for swing traders. I don't think it's a great market for long-term trend followers yet.
Don't disagree. I mean, I think I've been saying that. Like I've been, anytime I stick my neck out.
Look how strong bonds are. I mean, they can crash soon, but as of right now, I mean, for me, it's super unusual to see that strength when stocks are rising. And the same in gold. It's holding strong here above its 50-day.
Okay. All right. Mixed signals. I think you got to be careful. I think, like you said, if you're nimble, there's a lot of opportunity. I think if the market stays strong, there'll be a lot of bottom hunters in software. But I think through Thanksgiving seasonally, I'm going to stay cautious. But Nike, Lulu, Apple can really, and some of these semiconductors are really teed up as large caps to for people who want to just be conservatively try some longs. I think they're working. So we'll see. All right.
There are enough strong stocks not to be bearish.
Yeah, I think that's where and what I was saying about the private market, it's teed up with this negative sentiment around WeWork and Uber and Lyft and Slack and zero commissions, and it's out there. But the news is already out there now. Meaning, stocks are rising in the face of this bearishness, which is bullish at some level. But with the indexes in kind of a range, I think you got to be careful still.
I don't know. Something happened to my screen. All of a sudden, I lost you. So I don't know what's going on right now.
Okay. See you next time. Thanks, Ivan.
All right. Bye. All right. What's going on?
We're done?
Well, I need to see my screen again and stop the video. So you can just click end and I'll figure it out.